Hey, hello everyone. My name is Hari, and today we have a very special guest with us, Gabe. Gabe, do you want to start right away with an introduction?
Yeah, happy to. Great to be here. Good to see you again, Harry. So I'll give you the quick intro on maybe VanEck as a whole for folks that are not familiar, and then my quick personal background. So VanEck is a traditional asset manager. We have over $100 billion in AUM, most of that in TradFi products, but a few billion of that in digital assets. Within our digital assets practice, the majority of that is our passive products, our couple of ETFs here in the US, a bunch of exchange traded products over in Europe. But then we have three private funds. One of those is what I mostly focus on, which is a liquid token hedge fund. And then VanEck is doing a whole bunch of other stuff in and around crypto as well, including building some of our own on-chain products, some stuff that's out there, some stuff that's yet to come. I'd say VanEck has been pretty early among TradFi institutions in this crypto space. So that's been awesome to see. And then me personally, my background is in TradFi. Started my career in investment banking, doing M&A advisory, did private equity investing for a number of years at a couple of different funds, and at some point just fell down the shitcoin rabbit hole and fell in love with the space and came over to VanEck to help out on that front.
That's awesome. So, from my side, my name is Ari. I'm one of the founders of Cantina. I used to build a programming language called Solidity, and I fell in love with how powerful these applications are. You could write like 200 lines of code and suddenly manage billions of dollars worth of value. And I kept seeing it over and over again. And one of the key problems that we saw 3 years ago was, hey, the security was very important in the space. If you have a bug in one of your code or your software, you could now lose billions of dollars. Unfortunately, 2 weeks ago, Bybit, an exchange, lost $1.4 billion. But stories like that was very common back in 2020 and 2021. It wasn't billions, but millions. So millions of dollars in customer funds were being lost years ago, and we wanted to fix it. So that's why we started the company. We mainly focused on code security, but as security evolved, we also expanded our focus into like other things. And I'm very excited to get thoughts from people like Gabe and others in the industry in this talk. So I want to start right away with a big and important question, which is most of our listeners are builders or security researchers, and they've been hearing this word, oh, institutions are coming to crypto. What does it actually mean, Gabe? What does it mean for institutions to come into crypto?
Yeah, look, I when I think about crypto, I really think about three different buckets, right? There's Bitcoin, there's like tech crypto, and then there's casino crypto, right? Bitcoin at this point, of course, is well understood. It's the digital gold thesis that we've all heard ad nauseum. It's close to a $2 trillion asset. So that's just its own thing. And honestly, a lot of institutions are already on board with that or and have been for quite a while, right? Casino crypto is primarily retail, and a lot of institutions just aren't going to touch that side of crypto. Of course, when I say casino crypto, I'm talking about meme coins, the whole pump.fun meta, and all of that. And then there's tech crypto, which is honestly what I find to be the most exciting opportunity. And I think when people get excited about kind of institutions moving on chain, that's what they're talking about, right? It's the tech side of crypto. And what I see is I do truly see the world's financial markets, meaning equity markets, debt markets, et cetera, moving on chain because the value prop is just so evident, right? And we can talk a little bit about that. But my point is, I don't know when or where or what blockchain ecosystem ends up winning or taking the most share. It doesn't really matter. Over the long term, I just have conviction that'll happen. And so when I think about, you know, institutions coming on chain, that's what I think about it. I think about actually the world's financial markets coming onto crypto rails, and that's where all the settlement is happening.
Okay, that's amazing. I think you touched on this topic where value in crypto and in blockchains. And I'm curious, like, I want to double click on that. Like, what value do institutions and people like you see in like blockchains?
Yeah, I think a good example of that is, for example, the settlement cycle for securities trading, right? So it generally that refers to the cutoff date when a security gets traded and has to be delivered to the buyer on the other side of that trade, right? Decades ago, that used to be a T plus five settlement period, right? Meaning it would take actually 5 business days for the stock or the bond to arrive at the other side. Over time, technology has allowed that timeline to compress and for us to slowly creep that number down. But even then, it's taken a long time. It was T plus five for a long time. In the mid 90s, as computers started to proliferate, they were actually able to bring that down to T+3, still a hell of a long time. In 2017, which was then a whole 2 decades later, they brought that down to T+2. And then last year, they brought that down again to T+1, right? So they've been making incremental progress there even before crypto and before we take even any of this new tech into account, but it's been slow. And it's funny because each time they go through that process of shortening the settlement cycle a little bit more, they make a big deal out of it, and there's concerns that stuff is going to break, et cetera, right? So I always find that pretty amusing. And so the big deal about crypto is that can be the technological step that we need to finally bring that down, right? From T+1 to effectively T+0, right? Or T+ seconds or minutes. And that's a big deal, right? When you do that and you just unlock so much more efficiency, so you remove so much friction from the financial markets, and the opportunity is massive, right? So if you can do that and you can realistically bring that settlement cycle down for any kind of asset to T+0, in my view, there's no reason why all of the world's financial markets shouldn't be on chain. And that's it. The TAM of that, if you do that, is just massive.
That's a great point. Crypto is like 24/7 for better or for worse. And people talk about how if you are trading traditional assets like stocks or equities, you can only do it during trading hours. And even, but that's not how the markets work. The markets are like 24/7, even though you are restricted on trading like to like trading hours at an exchange. So I think even that unlock is like amazing, even though for traders, this means they
Yep.
have no breaks. But that brings me to the point, like, how does VanEck think about getting involved in a certain blockchain, for example? I want to get into assets later, but how does VanEck think about blockchain? You mentioned Bitcoin, but how do you look at a different chain, for example?
Yeah. Do you mean in terms of investing and what tokens we find interesting, or do you mean in terms of building and where we want to deploy products and that kind of thing?
I want to know both investing and also building.
Yeah, I would say totally different thought processes when it comes to the investing side and the building side. On the investing side, first of all, VanEck isn't a monolith, right? So meaning we have tons of different strategies and funds, and a different fund is going to have a very different view on a specific token versus me or another one of our funds. But for the most part, when we're investing, we're taking the long view, right? And we're understanding where is this blockchain ecosystem heading? Who's the team that's really spearheading development there? What is the total addressable market? Are users actually doing stuff on that chain, or is it all just vaporware and kind of nobody gives a fuck, right? So there's a whole process we do on the investment side. On the building side, it's much more focused on if we deploy something on this chain today, are there users and are there capital and is anybody going to care, right? And so there's a whole bunch of other factors. So for example, people talk a lot about like decentralization, right? Do we care how decentralized a chain is? Like we care to an extent, right? But beyond us, actually on the decentralization thing, I think it's interesting because a lot of people see it as a spectrum, right? From not decentralized to like completely centralized, rather from completely decentralized to completely centralized. And you always often get on crypto Twitter into these spats around which chain is more decentralized, right? And Ethereum will point to Solana and say, hey, like they have way fewer validators and this XYZ aspect of their architecture and therefore less decentralized. And then Solana will point to the L2s and be like, look, right, the multi-sig security council and the centralized sequencer, et cetera. Like, I think for an institution looking to build a product on chain, it's not that decentralization doesn't matter, but I see it as more of a hurdle than a spectrum, right? Meaning, and the hurdle is it just decentralized enough that your money is not going to disappear overnight, right? If all the validators collude. And if you have strong assurances that's not going to happen, then you don't care anymore, which is the most decentralized chain, if it's just past the hurdle, right? And then once the chains have passed the hurdle, you're really looking at like capital on chain, users on chain, the developer ecosystem and developer tooling, all that stuff is more important and what we take into account.
That's very fascinating. So what is like VanEck building? I also know that VanEck made some investments in some builders as well. I want to understand VanEck's perspective on what are the kind of products that you would like to see in the market and what you're building today.
So VanEck loves to experiment, right? And that's part of the firm DNA too. It helps that it's basically a family-owned firm, right? Our CEO, Jan VanEck, the firm was started by his father. Being effectively a family-owned asset manager means we can be a lot more nimble and have a longer-term view, especially on this asset class. And so there's tons of experiments. I would say we have some products out there already today. So an example of that is Segment, that was started by a colleague of mine here, Matt Bartlett. It's basically a collectible tokenization type platform. I think it's live on Abstract today, right? The Pudgy Penguin quote unquote chain. And so that's a lot of fun to play around with. We're doing all sorts of experiments that I can't yet talk about on the tokenization side. So we'll see if anything, like meaning the security tokenization side, and we'll see if anything happens there. And then we're also working with this company called Agora on the stablecoin side. And VanEck is basically managing the treasuries, right, for that stablecoin project. And that's just a few different examples, but the answer really is we're all over the place trying a bunch of different things on chain.
Agora is awesome. One of our customers as well on the security side. And something I hear a lot with founders these days is people feel like they can finally build the products they want instead of being put into this box that is defined by the SEC. I see a lot of optimism from founders today, finally being able to build the products that their customers want instead of what one of the regulators is telling them to do. So, what is your perspective on that? What do you feel is like the biggest unlock in crypto today as compared to 1 or 2 years ago?
It's been just a massive sigh of relief. Just not the amount of mental overhead you've removed from every founder in the space, because now they just don't have to worry about going to jail, right? Assuming they're doing the right thing, of course, which can't be said about a lot of projects in crypto. But just removing that like concern around, hey, I don't have to go to jail for just building my startup, and I can actually just focus on shipping product, kind of building something cool. That is just the major unlock of this cycle. And there's more unlocks to come too, right? Just getting the SEC to stop its hostile pursuit of like legitimate businesses was a big deal, but we still have a stablecoin bill that's to come in the US, right? We're going to have a market structure bill of sorts, hopefully sometime this year. And those are going to also be incremental unlocks to just allow, frankly, like we were talking about institutions coming on chain, right? Like that's what you need for the next wave of institutional adoption of folks coming on chain.
You brought up two interesting points, the stable coins as well as like market structure. So for those listening, could you explain what does that mean?
Yeah. So on the market structure side, that means there's fundamental questions around what is a security, what is a commodity, what is a collectible. And those have historically been difficult questions to answer because Congress wasn't willing to pass legislation and the SEC wasn't willing to answer questions, right? So it was just like, all right, what the hell do we do here? And the reason those are critical questions is that if you're dealing in securities, there's a whole process in the US, at least, I'm talking about the US, that you have to go through in order to register those securities, because selling unregistered securities is a crime. And like actually having legislation saying, hey, XYZ types of tokens or types of assets are securities, and these are commodities, and these are collectibles, actually allows builders to then understand where do their products fit in this diagram, and how do they come to market, how do they make sure to comply with the law, et cetera. So that's a big deal. So that's on the market structure side. And then on the stablecoin side, it's also about just creating the frameworks around, all right, if you're going to be a stablecoin issuer in the United States of America, like here's what you need to do in terms of disclosure and transparency. Here's what your collateral needs to look like. Here's how you protect consumers. Here's how you do X, Y, and Z. And creating that framework is what you need for a lot of institutions that have been wary and hesitant about engaging in stablecoins to finally make the leap, right? And to me, that's the 0 to 1 moment in crypto, is when institutions are no longer afraid to touch stablecoins, right? Because there's an actual kind of framework around it. And then they can realize, all right, actually my business is just better, cheaper, faster now when I can transact at the speed of light. So it's a big deal, right? So that's why we're excited about stablecoin regulation. That's why we're excited about market structure regulation, market structure legislation. Of course, we gotta hope that legislation, once it comes out, actually looks good, right? There's some concerns around the stablecoin bill and what could be. That's a whole conversation for other people that aren't me. We hope and we lobby and we try to make sure that stablecoin bill looks good and is healthy for our industry. Because if it is, I think it's going to be a major unlock.
Yeah, I agree 100% on that. For like, we are a marketplace and we connect secure searches with customers looking for secure reviews. And stablecoins have been a massive unlock for us as a marketplace. Like, you get to work with anyone around the world,
Mm.
and as long as they comply, we can pay them in stablecoins. And I think it's a phenomenal unlock. I've heard like horror stories of people waiting for like weeks for a wire transfer to clear across borders.
No,
Whereas stablecoins, it's instant. Yes,
nothing radicalizes you more than trying to do a cross-border wire transfer, right? That is just like a holy shit moment.
100%. Like, there is so many fees that are not even transparent. There is the exchange rates that are also not transparent. And I've heard stories of people losing thousands of dollars in just banking fees just to get their money moved from like the US to a different country. So
Yep.
it's incredible what a big unlock stablecoin provides. And in a way, it's also like a way for US dollar to become like a dominant, like fiat currency across the world, which for better or for worse, it's one of the best assets in the world.
Yep.
So very bullish on stablecoin. Even a company like Stripe, which processes trillions of dollars of value in the world, they are bullish on stablecoin. They had an acquisition of a crypto company named Brits
Yep.
that built a lot of stablecoin APIs. They had a annual letter where they talk about stablecoin. So I see a lot of optimism around stablecoins. And as a user that finds stablecoin unlocking an entirely new kind of business where I can now work with people around the world. As long as they comply, I can pay them without any other issue. I'm very happy to see like stablecoins like becoming big. And I already saw some banks in the US that are making stablecoins somewhat native in their banks. So you can now send stablecoins right within your bank account to an address on chain. I saw it with like newer startup banks like Meow, for example,
Mhm.
but I expect to see this coming to like bigger banks in the future. And the fact that now I can go from a bank to an address on chain in like one click, that's a huge unlock. So I'm very optimistic about stablecoins and like what it begins to unlock. And a related topic on that, you mentioned a lot about compliance and security. Institutions are usually known for having like being somewhat conservative when it comes to risk. And I'm curious to know like your thoughts on like how you look at risk in crypto. Like, you already mentioned some things like, oh, you look at decentralization in chains and you want to make sure that the assets are not getting lost by a single entity. I'm curious, like, when you put your assets on chain, like how do you think about risk?
Yeah, I'll talk more like I'll talk a little bit about VanEck, but also just talk more broadly, right, about how kind of any institution looking at crypto would evaluate risk, because I think it your view on risk as an institution depends on where you are along your crypto journey, right? Because the majority of institutions at this point are in what we'll call step one, which is they just view this whole space as one like giant flaming ball of risk, right? And they're hesitant to touch it at all. And that's the initial hurdle that every institution needs to get through. And it's mostly just an educational process, right? And then you get to step two, which is, okay, the institution has now realized that there's some value prop to doing stuff in crypto, right? You can make your business more efficient, you can cut costs, you can compress settlement cycle. And so then the question is like, how do we even hold any of this stuff? So that's basically thinking about custody and the various risks associated with that, right? So custody risk is massive as an institution looking at this. And for many institutions, the answer will be that you just go find a qualified custodian, right? And you vet them and you onboard them. That's people like Anchorage, like Coinbase Prime, et cetera. Which, I mean, by the way, as an aside, that's why ETFs last year was such a big deal, right? Because just removing all that friction around institutional custody by wrapping this stuff into an ETF that sits cleanly in your brokerage account is super helpful for an institution that is just starting to dip their toes into this whole thing, and it just removes much of that concern around custody risk, right? But for institutions that are like starting to dip their toes, I think that's the biggest area of concern is the custody risk. And then when institutions are like, all right, I get crypto, I already own some crypto, now what else can I do with this stuff? I think they arrive at the final step, which is where I would say VanEck has been for quite a while now. And when you get to that point and you're like a crypto curious institution, you can of course go in a bunch of different directions, right? You can jump into DeFi and start doing some stuff directly on chain, or you can even start building your own like crypto enabled products. And when you get to this stage, the amount and the variety of risks just expand dramatically, right? There's risks that exist in TradFi, but they also exist in DeFi, and you just have to carry that over and adapt and find new ways to mitigate that risk, right? So compliance risk is an example of that, right? Just simply as an example, just making sure that you're not interacting with OFAC sanctioned people, right? If you're a US company, that's a big deal. And then there's, of course, if you're interacting in DeFi or you're building something in DeFi, smart contract risk, right? The type of stuff that you guys help with, that is, of course, massive, right? And a variety of other risks. But when you get to that final stage, it's just, there's so much more risk to be cognizant of. And as the industry is still maturing, we're still finding out the best ways to mitigate a lot of those risks.
And how do you think about bringing some of this toolkit from TradFi into DeFi or even crypto?
Yeah, I think I see a lot of experimentation going on right now to help institutions manage a lot of these risks, right? And so I think for an institution looking to get into crypto, you largely want to leverage kind of the great work that these teams are doing, right? As an example, we were talking about OFAC sanction compliance, right? There's tons of ways you can potentially deal with that, right? So I see teams that are building permissioned dexes as an example, right? Or I see teams that are building like hooks on top of UniV4, right? And that can be another great way. I see teams that are thinking about token extensions on Solana and what can you do there to kind of permission it at the token level. I see like entire chains that are focused on solving this problem, right? There's RWA chains like Kinto, like Plume, et cetera, that are building some of these primitives. And I think at this point for an institution looking to get into the space, you're mostly like looking at the tooling that's available out there and cross-referencing versus, all right, what do we need to make sure we're doing so that we're not breaking this rule or another? And you're adapting, right? That's mostly what the game is at this point.
And what do you think like VanEck is? You mentioned earlier like VanEck is, a few steps ahead of like a lot of players in the industry. Can you explain like why that is the case? I feel like when ETFs were a thing, like VanEck was one of the few leaders in the space that was like very open to ETFs. And in a way, like VanEck is like ahead of the curve. I'm curious like why that is the case. What part of VanEck and the company culture allows you to do that?
I think it's interesting because part of the origin story of VanEck with Jan's father is that he recognized an opportunity in gold, like physical gold, well beyond way before the rest of the market did, and built a whole business and a very profitable product around that, a very profitable fund around that. And so this Aryan view is built into VanEck DNA, right? And it happened with Jan's father with gold, and then Jan recognized the same opportunity in Bitcoin pretty early on, right? And just decided to make a key bet there, like well before most firms were even paying attention. And so that sort of contrarian kind of willingness to experiment, I think, is just built into VanEck at this point. And I mentioned before, it also being a family-owned asset manager helps a ton, right? Not having to answer to screaming shareholders if you're a public company, just gives you more flexibility.
So gold, then Bitcoin, and what else? What is Jan looking at after this?
Yeah, gold 2.0. What is gold 3.0? I don't know. I couldn't tell you. I think we'll have to see.
That's a great way to put it. Like starting at, and also the history and the legacy, like starting with gold and then moving on to Bitcoin. And yeah, I'm curious to see what's the next asset. On that topic as well, something I've seen some of the traditional institutions do is look at places like L2B before trying to get involved into an L2, or even like trying to read up on, hey, what do people think about this thing? And I heard some people looking at what are the risks in each of the L2 before getting into that L2. I'm curious to understand some specifics on, okay, you mentioned earlier what you look for in a blockchain, but what are some like key risks that you're looking into? Do you look at L2B, for example, to read up on, okay, how safe an L2B is? What are the risks? Is there any other tools that you use to understand risks before getting involved?
I do look at L2B with some frequency. I would say that going back to the framework of how we think about which blockchains both to invest in and to build on, I would say, again, the most important factor for us is actually just where are the users and where is the capital, right? And where is the activity? Because there's just I don't know how many chains L2 Beat lists at this point, something like 120 or something, right? Maybe 5 of those 120 have actual real activity, like at scale, happening on chain today, right? And generally, if you're deploying a product, you, at least from our perspective, you want to be doing in one of those most active chains. And it also tends to be the chains that are, at least from L2B's perspective, the most quote unquote decentralized, right? And have the most kind of green slices on the pizza pie. And so those two things have coincided. But again, I look at L2B, but it's not like the key, like the decentralization scoreboard is not the key thing that's driving what we invest in or what we build on, right? It's we look, we care, you got to be cognizant of that, but it's not the key driver, I would say.
And I'm curious to know, like, how does like a security incident look like in the TradFi world? Well, what are you most concerned about? 2 weeks ago, we saw in crypto there was one of the biggest hacks in the world. Bybit, an exchange, lost $1.4 billion of customer funds. Fortunately, they were able to fill the hole with their own capital, but most people are not fortunate enough to do that. And I'm curious to know, what are big security incidents in the TradFi world? Can you explain to our listeners what does it actually look like to lose customer funds, or who is the final boss of TradFi? Is it North Korea or is it somebody else?
Yeah, this kind of scenario where,
Gabe, could you adjust your mic? It's a little bit cracking.
oh yeah, sure, hang on.
Okay,
Is this good?
I can still hear some cracking noise, cracks the voice.
Yeah, this is not a great mic, unfortunately.
Okay, we can probably edit it in post.
Yeah, sorry about that. I gotta get this figured out at some point. But if you want, do you want me to try dialing in from a different headset?
Right now, it's better.
Is it better? Okay.
Yes.
So look, this scenario where like North Korea comes in and just like swipes 1.5 billion and there's kind of nothing you can do about it. Obviously, that doesn't happen in TradFi, but there's all sorts of risks and kind of systemic issues that we've seen over time. And it generally stems from credit risks and all sorts of counterparty risks that you don't really understand. And TradFi, of course, is a chain of different institutions. And when things really blow up is when you don't understand a particular risk at some point in the chain. And we saw that in the big financial crisis a little over a decade ago. And so blowups happen in TradFi, but they just tend to look very different to our crypto blowups. And part of the risk of TradFi institutions coming on chain is that there's a lot of institutional knowledge now of how to deal with and mitigate these risks that we're familiar with and comfortable in TradFi. But as you enter DeFi and as you enter this on-chain universe, you're on square one and getting up to speed, and you have to re-underwrite a lot of these risks now that you're not super familiar with. And so you just got to make sure if you're an institution coming on chain that you're not exposing yourself to some new blow up that you weren't even thinking about.
That's fascinating. It looks like a lot of the risk you're worried about is like economic risk. Are you managing your risk correctly? It looks like you're not so worried about North Korea trying to steal all the money in 1 second. Although I think North Korea had this famous hack in the past where they almost tried to steal $1 billion from a bank in Bangladesh. It's a fascinating story to read for anyone that's interested in understanding cyber crimes. It was very well planned. They tried to plan it on the day of bank holidays across the world, and they tried to fish certain employees. They tried to like get access to a bank in Bangladesh,
I don't know that
and
case
they
in Bangladesh,
almost
but that's very interesting.
yes, yeah. So for anyone like listening, look up like North Korean attack on this Bangladesh bank. They almost got away with $1 billion, like away from like the Bank of Bangladesh. And the way they planned it is fascinating. They used it was very opportunistic. They planned it on a certain time where people were off, and they made it all look like a legitimate transfer when in case, whereas it was not legitimate. Always fascinating to hear what are the biggest attack vectors
Yeah.
in the ecosystem. But this is also scary. If you have settlement instantaneously, right now, what if it's a malicious settlement? What does it actually mean for the company? So I feel like we're all going to learn together, like how to secure it
Yeah, and I mean
because
on the
you don't want to lose money to upgrade. Yeah.
like on the cybersecurity side, there's also tons of stuff that happens all the time, even in the US, right? A lot of cases we hear about, and then a lot of cases we actually don't even hear about because companies try to keep it under wraps. But it's not uncommon at all for you to get some major ransomware attack where a ton of critical files are locked up and the company has to make a big ransom payment. Happens all the time. Happened, for example, to one of my portfolio companies a while back when I was still in private equity. And like then if you're a company and you didn't have the right cybersecurity protocols in place and that happens, it's like, all right, you either pay a few $1,000,000 or you basically lose your whole business. So you're forced to make the payment. So it's crazy. That stuff happens for sure, but it's still a different risk profile versus some of this on-chain stuff where literally money can just be pulled and then you have zero recourse, right?
Yeah, that makes sense. And on a related topic, like how should builders think about compliance? As a traditional company, there is a lot of things that you have to do to be compliant with the regulators. I think most builders today are not really familiar with that. Do you have a framework for the builders listening to think about compliance?
Yeah, I think you just got to start from first principles, talk to institutions, and get the checklist of what are all the things you already do in your existing products to comply, right? And there's all sorts of AML, KYC checks that companies do today on their TradFi products, and they're going to have to do the exact same thing on chain, right? So I'm starting from first principles of what are the work streams that need to happen, and then adapting your product to make that work stream feasible and even more effective if you can. But you've got to start with just like understanding the customer needs rather than building the product and then going to the customer to figure out that it actually isn't compatible, right?
Yeah, totally on the same page there. I see too many hardcore engineers that tend to just build and they got to ask themselves, are they building the right thing for their customers? So it's a good time to be reminded of that. So I mentioned earlier, one of the reasons I'm excited about crypto is how powerful these smart contracts are. Like you can write few hundred lines of code and suddenly it's managing like billions of dollars. So one of my co-founder ended up writing the largest smart contract in the world. It's an Ethereum deposit contract and it's like few hundred lines of code. The core contract is probably like 50 lines of code. And this contract is managing probably $200 billion worth of assets, depending on the price of ETH. And it's crazy how every line is almost like a billion or $2 billion if you divide it across a single line. And like even at companies like Uniswap, they sometimes have days where they do more in volume than Nasdaq, and they're like few thousand lines of code. But one downside I see today in crypto as compared to like traditional institution is like privacy. And I want to understand like how does you and VanEck think about privacy in the space where every single transaction is public, and some institutions may find that very uncomfortable. You may not want to reveal all your books. You may not want to let the mempool know what you're about to do before it actually happens. So how does VanEck think about privacy? And I think this is going to be a very hot topic over the next couple of years in crypto.
It's a massive thing for sure. To your point, we hold stuff and we don't necessarily want sleuths on chain figuring out exactly when we're buying, exactly when we're selling, right? In TradFi, you generally have an expectation of privacy until you disclose what you've done, and it's the inverse of that in crypto. Today, dealing with that is basically a lot of like workarounds, right? What a lot of people end up using basically centralized exchanges as a quasi kind of privacy shield, right? Where obviously once the money goes into a centralized exchange, you pull it out to a different address and you've cleaned up your trail. The centralized exchange obviously understands what your addresses are and can report that to law enforcement, but traditional finance institutions aren't worried about law enforcement. They're worried about just like randoms, like tracking their every movement on chain, right? But to the extent that tools, and I see tons of teams building this, right? So I think it's just a matter of time at this point. But to the extent that there are tools to streamline this and do this more effectively without having to do a bunch of hops between centralized exchanges, that's also a pretty good unlock, right? To let institutions have a little more privacy on chain. I think that's a big deal.
Also, privacy is becoming a very hot topic in the US and across the world as well. Some countries are against the idea of encryption today. And in America, it's a very interesting spot because software is considered free speech.
Yep.
And people are allowed to publish software and let people use it. So there was a recent exchange in code where I think part of it was considered protected by free speech rights, which is fascinating. And I talked to like builders who are building like privacy tech, and they want to be able to build blockchain where everything is like private by default. And do institutions like VanEck see value in that? And like, are they building for the right customers? And I'm just curious.
Definitely see value in that, as long as that, and I know teams are doing this, as long as that privacy preserving blockchain still has mechanisms to make sure that you as an institution interacting with that blockchain can prove that you're not interacting with OFAC sanctioned entities. But to the extent that, and you can do this with ZK proofs, and there's all sorts of ways you can actually tackle this problem, but if you can actually have a privacy preserving blockchain while still provably complying to regulations, that's the holy grail, right? I think absolutely there's product market fit with that.
Yeah, makes sense. On a related topic, how do you think about insurance? Because I know for a traditional company, insurance is important. You want to make sure that you don't lose customer funds. But we are in a very nascent industry where there isn't the entire institutions around insurance is not quite there. There's a lot of mechanisms, including reinsurance providers in traditional insurance platforms, and that doesn't exist in crypto at all. So how do you think about insurance in crypto? And is it something that you care about, and why is it important?
I think we definitely care. I think a lot of the major custody providers today, their own insurance that they're getting through a Lloyd's syndicate or whatever. Robinhood is an example, right? Has some insurance against crime, which would include some sort of cybersecurity breach. This also ties into the previous conversation we had around the regulatory environment, right? And legislation here in the US, et cetera. Because having an unclear regulatory environment and a government that's hostile against crypto also means there's less capital willing to insure this space, right? And so better regulatory environment means more capital and more people that is comfortable with the space, which means lower insurance rates, right? And as we get more regulation, I think the pool of available insurance capital increases, and I think we just get better terms. And with better terms, you get more people that are willing to buy insurance in the first place, and it's a virtuous cycle that's really helpful for this industry. But I think first and foremost, kind of insurance at the custody level, I think is key. And like I said, a ton of these, at least here in the US, a ton of these providers already have some level of insurance there. I think what's more nascent is still interesting, but more nascent and with a lot less adoption is some of this like directly on DeFi kind of smart contract related insurance. That stuff is, I think, still needs to mature a little bit more before it really has product market fit. I think a lot of institutions today, when it comes to interacting with something that's particularly risky on chain, where they feel there's like a real possibility of principal loss, I think they just won't engage, right? Instead of engaging and looking for some insurance solution. But I think with enough good teams kind of building there and with more regulatory clarity, I think that can change as well, right, over some time frame.
I agree. I want to see like more of the traditional mechanisms applying in crypto as well, because if you run a crypto startup today, like us, it's not that easy to get a traditional insurance for the company. And it's quite important. There is some risk involved, and you want to make sure that every party feels comfortable working with you. And one of the things that I'm looking to see grow is like insurance, where people want to put their money in, people want to work with customers in crypto. They can be sure that there is no big risk that will affect them. And even if there is some kind of insurance that can save them at the end of the day. So I think one sign of maturity for industry will be like seeing more insurance options for individuals and for like institutions and like corporations. So I'm really looking forward to that. And we're almost at time here, so I want to end with a couple of questions on what is the future for institutions, for crypto. And I see a lot of optimism with founders building today. You mentioned Robinhood earlier. I'm curious to know what are the other companies that you're excited that's dipping their toes into crypto that is more on the traditional institution side?
One of the things I'm most excited about today is we're starting to see stablecoins is obviously the next killer application in crypto, right after Bitcoin itself. And we're starting to see stablecoins just enter the mainstream conversation, even in companies that historically just haven't done much in crypto. And it's popping up in like random earnings calls, right? Where like equity research analysts are directly asking companies like, look, are you looking, I'll give you an example, right? Like DraftKings had an earnings call not too long ago they spend a ton on payment processing fees, right? It's more than the average business, because the average business is like one way, right? The customer is paying the business, and there's that 2 to 3% charge there. But with a sports betting company like DraftKings, it's two-way. Customer sends money to the business often sends money back to the customer. And then there's also really high chargeback rates because it's in a high risk industry like gambling. And so they're paying somewhere between 6 to 8% of their revenues in payment processing fees. And even though they haven't done a ton in crypto historically, it was fascinating to me because an equity research analyst on the last call directly asked the management team, hey, like on the payment processing side, are you looking at stable coins? Is that something you're exploring to bring costs down? And this is just one example, but we see those conversations happening. And so it's not just Robinhood, it's not just Coinbase, it's not just like our favorite crypto native firms that are doing this stuff. It's just proliferating, right? And people are starting to have these conversations on how can their core business actually be improved by this technology. And to me, this is exactly what we've been hoping for, like for those of us that have been in crypto for a long time, right? And we're starting to see it. So it's super exciting.
Yeah, I love that for like multiple reasons. One, it's mass adoption we've been talking about for a long time. But beyond that as well, I think we're at a point in crypto where people are really thinking about UX. The UX in crypto has been like terrible for a long time. Like you got to be an expert in like crypto and in tech to use it today. But that's not really like good for adoption. I want like crypto to be useful for my grandmother, and like the way it's built today, it's I don't think like anyone like old or anyone that's not as tech savvy would be able to use it. But I see a lot of people building for like new. They don't want to rethink like wallets, for example. They want to understand what it means to custody assets by yourself, but without any like crazy like loop, the crazy like holes that you have to jump through.
Mm-hmm.
So I was, for example, talking with builders at the Ethereum Foundation who was building this new account abstraction feature called EIP 7702. It's going to allow individual wallets to operate more like smart contracts, and it's going to allow people to do like simple things in a very simple way instead of trying to approve and swap and all this like complicated mess. So I'm very excited to see if people like DraftKings are using stable coins to pay people. What does the user experience look like? And today or like last year, I don't think the crypto UX is there to support that use case, but I'm very confident right now that we're building in a direction that like individual users can hold crypto without even like knowing that they're using crypto. I think that's the magic of technology, that things just look seamless. Um, on that topic as well, what are you optimistic about crypto? Like you mentioned stablecoin. What are the other projects you're seeing in the space that you really want to see succeed?
I'm excited about so many different things in crypto. Like even some of the crypto verticals that a lot of people have lost faith in. I would say crypto gaming is one example of that. I'm still super excited because I see high quality teams that are still at the frontier, really building cool shit there. And so to me, it's just I'm waiting for all of the crap to get flushed out. And it's been a wild kind of month and a half in crypto, right? Between kind of Trump meme coin launch into Malay meme coin launch into pumped up fund volumes, retracing 90%. I really feel like that's what you needed to just reset and flush out a bunch of that excess and just get people to come back and start building just real stuff that'll have end users. And I think now we can get back to just focusing on real products. And so tons of cool stuff happening on the gaming side that a lot of people have just discounted completely, but I still think is super interesting and will find product market fit. Deepin, I remain super optimistic and excited about. Helium is still one of my favorite projects ever. They've had some road bumps along the way, but it's one of the projects today that legitimately has over 100,000 users using the Helium mobile phone plan. That it remains to be seen how well they can proliferate their hotspot network and how much data they can really offload to their hotspots, but still super cool, awesome experiment. I'm so excited to see it. And so Deepin, gaming, maybe a couple examples of stuff I remain super excited about.
Okay, amazing. So you also mentioned like Agora, then Helium, Deepin, any other companies you want to give a shout out to? I want to help like builders like get some attention in this talk as well.
I got to be careful because I don't want to make it seem like I'm picking favorites, right? Between our liquid token hedge fund and we also have an in-house venture fund, we've made many dozens of investments, and there's tons of builders we're super excited about. So me calling out any specific company here, hey, I'm not picking favorites. I love all the builders. there's lots to be pumped about.
Okay, amazing. Okay, I'm also like extremely excited about what's coming for crypto. Like I see founders being able to build like real companies right now without being worried about going to jail, as you mentioned. And this means more innovation, which also means like more value for like end users. I think that's what's like important for everyone. Like I think banks for a long time have stagnated. Like the bank you use today is like the same as the bank you had 20 years ago. And when you talk about tech, it's like exponentially increasing every year. Think about like how fast a chip is growing. Chips are getting like double every 2 years. It follows like Moore's law. But I don't think like traditional money have really followed that path. And I'm very excited to see like how we can bring technology to a lot of traditional institutions and at the end of the day give users a completely new like experience. So I'm very bullish. I was at Denver last week and I met a lot of young builders and also builders that have been around for a long time. And they are all like looking forward to building great products. And as a consumer, I think like it's never been a better time to be in crypto. You can see like real applications finally instead of all the mess that's been around for a long time. So very excited.
Yep.
Thank you for joining this talk. Thanks for giving viewers and VanEck's perspective into like how you look into crypto. And this was very useful for me and I'm sure for a lot of the builders and secure researchers listening. Once again, thank you.
I appreciate it, Harry. Thanks for having me.
All right then. Bye-bye.